Hey traders, it's 10:51 on October 6th. I'm all done trading for the day, but thought I would make a quick video about this stock PPSI that was on my watch list. And in my watch list video that I released earlier today before the market opened. And I wasn't that impressed with it in the pre-market. It was the top gapper of the day, but still didn't look too hot. There's a couple of plays for the break of highs, and I got in on one of them, I think for the break of this high, but it was kind of choppy. It wasn't very clean. And then was looking for it to break the pre-market high, and it did that at open, but just on the first minute candle, and it wasn't very good. This happens a lot with these top gappers lately. They pop up over the pre-market high and then they sell off. But the name of the game with this stock today was patience, waiting for the setup to come to you. So if you marked out that high of day at 360, then you can kind of watch this curl happen and wait for it to break back up over that. It came up close here and then sold back down, retraced here on this little pullback, and then it started to gain momentum again, and then all in this one single 1 minute candle, it broke out through the high of day. You could have bought in just above that 360 level, like 361, and taken a little bit off the table, either at that pop if you were lucky enough to get all the way to 380, or when this candle closed around 373, that's still a 13-cent gain, which is nice. And if you're scaling out, like I suggest, with your hotkeys, then since this is now the market, you could have then put a stop loss in for the remainder of your shares. Once, well, not on this candle. I mean, I guess, yeah, you could have put it in for break even, because let's say you sold out half your shares, so you've already got, you're already in the green, and you don't want to give your profits back, because sometimes you get a candle like this and then it flushes out. So then the next step would be, to put in an order at your break even, or maybe even just a tiny bit above to cover cost or something like that. But if you really thought this thing might run, just put it right at break even. Well, let's pretend you got in at 361, because that was the high of this candle was 360. So you want to get in at 361 ideally. So you've got your stop loss set, and you set it for 361. Once this candle is done forming, then I would put it at the low of that candle, which is 371. And then so now your remaining shares, you have another 10 cents per share that you're holding on to. And if this next candle broke down and stopped you out, you'd still have 10 cents plus your original 10 or 12 or 13 cents, whatever you caught on the first candle. So that's already an awesome trade, no matter what happens after this. But if you keep your stop loss at the low of the candles, here's what would have happened. Now you got 7 more cents that you've made, and then you bring it up to the low of this candle. So what was that? 4 more cents, and then you bring it up to the low of this candle, and you're adding 429 was the low. What was it here? Wow, that's a pretty big jump there. So 35 cents on top of your profit. So you originally got in at 361. So now you're already. Oh no, I'm sorry. I read the high of the candle. 392, 361. So 31 cents. That's still huge. Then it goes higher still, so you bring it to the low of this candle, 411. So 361 to 411, 50 cents per share. That's awesome. And then you would have gotten stopped out here on this candle. Then the next move would be to buy the breakout of this high. So you'd be looking to get in at 436. This is like a whole new order now. I'm assuming that here you were stopped out, and this whole trade is done. That trade is done. So now you look for the break of this high. This is assuming you have money left, if you have like a cash account, or trades left if you limit yourself to a certain number of trades with a margin account. So the high of 435 gets broken over here on this candle, and then if you take the first pop you would have been out here around, let's just say 450. So that's like a good 50-cent gain. And then you could do the same thing again. If you scaled out, then you have your remaining shares. Actually, this one, so with that technique, here's what would have happened. The high was here, 435. So you got 436. Then this candle dropped below 433. So you would have gotten stopped out on your break even, but you still would have been green on that trade, and you're green on this trade big time. So you're still doing great. Then you can say, okay, well, now I'm going to buy, since you've got another red candle here that indicates a pullback. You say, okay, well, now I'm going to buy for the break of the new high of day would have been this 455. I'll be a buyer at 456. You get in at 456, and then maybe you get lucky and you catch 10 cents off that pop for your partial shares, and you do the same thing over again. I don't even remember. I know this thing went a lot higher, but I don't remember where the bottom of these candles went. So we could get stopped out again, but I'm just kind of talking you through like an ideal way to trade something like this safely, or scalp it really. So we got in at 453. So now we got a stop loss order in at 453. And looks like, yeah, we get stopped out on that candle. And then I honestly wouldn't be buying. I think I would be done here, because you don't know that this is going to happen. I like to buy the break of the 1 minute candle after pullbacks. So this stuff, you could feel definitely FOMO. You're like, oh my gosh, I'm missing out on all this move. But I don't really see a way to avoid it. Not with my strategy. I know there's some strategies that say, wait till it dips below the 9 EMA or 9 SMA. But in the long run, I think you're going to get burned more oftentimes than not doing that, because this is a really rare situation where these stocks rip up like crazy. So the lesson here, is to develop a trading plan that is conservative and will allow you to get decent portions of the move here. I mean, I lost track, but I'm sure it was like over $1 worth of this move, which is pretty awesome. I mean, I know we got 50 cents on like the first trade or two. So that's huge. You can't FOMO into these run-ups. If you start buying these things, eventually you're going to get caught in a flush. And that's the danger. So like, for example, here you buy the break and this thing flushes down right away, and then boom, you take a huge loss, because the high was 423. So if you bought it at 424 and you just gave back like 40 cents per share of your gains. So that's what happens, if you like FOMO into these moves. So let's see what happened. Now you've got another pullback here. So you could, if you want to, keep trading this thing, you could buy for the break of this high, because this is now the new high of day. So 560 would be your next entry. And the idea is to keep doing this, until you catch the stock, rolling over, starting to sell off. And you can keep doing this, especially if you just keep your share size the same. The first time you get stopped out, even if it's for a little loss, you've got such a cushion built up already that you're good. So let's say you buy at 560. When it breaks the 559 mark, you're in here, and then you get some of that pop, and you do the same thing. You put your stop at break even, and you're out. And then you say, okay, well, let me try to do it again. You've got profit there, because you took the pop, and then you got out at broke even. So you're still in the green. So there's no reason to stop if you still have money left or trades left. 591, let the stock prove to you when it's done running. So you'd be in on this candle at 591, and then you would sell out, the pop here, and put your stop loss at that break even point. Now this one didn't stop you out, so you're still in it. And you're still in it here, as long as you didn't, let's see, the low is exactly the same on both of these candles. So if you put your low, maybe if you put it at $6, you might have got stopped out here. But if it was at, say, $5.99, you could still be in this. So you're at $5.99. Let's see what happens next. It looks like, okay, so we would have got stopped out at $5.99, but we got in at $5.91. So that's still 8 cents on your remaining shares. So if you caught some of this pop up for half your shares, you could have got like 30 cents at the maximum, and realistically at least 15 cents there, and then 9 cents on your final remaining shares. And then it looks like this thing's starting to roll over. I don't remember if it popped back up again, but the next entry would be at 651. So you don't do anything until it breaks 651, and if it doesn't, then that confirms that, hey, this thing finally rolled over and is selling off. Well, it broke it again. So if you're watching it to break that high and you get in at 651, same thing. You take your first pop. So that could have been anywhere like around 30 cents, or at the minimum, 10 or 13 cents if you waited until this candle closed. And then again, putting now a stop loss order in at 651, bringing it up to the bottom of this candle, which the low is 661. So you're already 10 cents in the green on your remaining shares. You bring it up again, it's another 14, 15 cents on those remaining shares, and then you would get stopped out here. And let's see how high this thing went, because now you're looking for the next high a day. You got stopped out on this candle, so your next entry would be for the break here, 741, and then you would get in here, 741. You probably are not going to catch this, because I bet you this happened really fast, and then it sold off. So this would likely be like a losing trade, or if you're lucky, a break-even trade. But man, you just had like 5 or 6 good trades in a row. Of course, this is ideal. The reality is that it may have not happened quite that way. But if you're trading well and you're trading to your plan, and your entries actually get filled, then this could actually happen, very similar to what I just talked about. And then, so the next entry would be for the high of 753, so 754, and then boom, it does it again. And you've got another huge green trade there. That's almost 50 cents. And then you can put your remaining shares at 754, and then bring it up to the bottom of this candle. So you got another 30 cents on your remaining shares, bring it up to the bottom of this candle, and then you're stopped out over here. You got in at 754, so that's almost another dollar. I mean, this stock has had so much opportunity in it. And you can see that if you trade the plan that I use, where I'm trading these stocks that are trending up with volume, clean price action, buying for the breakout of the high a day, and taking the first pop, and then selling 50% of my shares at the first pop, and then holding the other shares, and just bringing the stop losses up to the bottom of the candle, you're going to catch huge chunks of these moves. It's impossible to get, to catch the bottom and the top of the stock. It just doesn't work out that way. So you have to have a plan that allows you to get most of the move. But I like this strategy. I've tried a lot of strategies in like the past 6 months, a lot of different strategies, and this one is my favorite so far. I didn't catch all of this. I was already done trading before the majority of this move happened, but what I just went through there is exactly how I would have traded it if I was still trading during this whole process. Where before, like, one of the strategies I used to use is just keep holding it until it drops below, say, like the 9 SMA or 9 EMA, and what would have happened there is, let's see, you still would have gotten some green on this in this case, because we got in around like 754, and then you would have gotten stopped out probably about here, 795. So you would have caught maybe like a 40-cent move. But with my strategy, I went from 754 and got stopped out here at 873. So that's $1.20. That's a big difference. So I really like the idea of basically what it is a manual trailing stop loss. Bringing that stop loss to the bottom of each candle. I think in the end, you're going to catch a lot more of the move, and you're going to avoid getting flushed out, because as soon as the flushes happen, you'll get stopped out before it takes you down with it. So anyway, PPSI was a crazy mover today. I called it on my watch list. I'm not saying, I knew it was going to do that. We never know what these stocks are going to do. This is really the exception to the rule. So that's why we call it a watch list and not a trade list. Just because it's on the watch list doesn't mean we're going to take a trade or that it's worthy of taking a trade. But here was a time where it did work out. So if you were watching it and you had a good plan in place, then you were able to catch a lot of this move, assuming you had trades left. All right. Any questions, let me know.